Hello and welcome back to Core Finance. I'm Matt Brown. I'm joined by Alejandro Zambrano, Chief Market Analyst at Amana Capital. It's been a little while since we've had you on the show, so thank you very much for joining us today. And we're going to look first off at dollar yen. Now just talk us through this chart. You briefed me off air about what's going on here, but for our viewers it's a very important chart and something they should be looking at if they're trading.
Definitely, yeah. So a lot of the big banks, they usually look at other markets that tend to correlate well with the currency pairs that they're analyzing. And there is a very nice correlation between the Japanese stock market in green and the light blue line, which is the dollar yen. In fact, if we look at the correlation over the last 5 years, if this correlation holds, then actually the dollar yen should be trading closer to about 127, which is quite a big move because the market's right now at 113.81. So the dollar yen has a bit to catch up with the stock markets. Then we also look here at the US 10-year yield, which has actually been the better one in explaining the variation in the dollar yen over the last year or two. And if you look at it from that perspective, then yes, the dollar yen is probably where it should be trading at. And if we want to know what's going to happen with the US 10-year yield, then it's about the Fed, the fact that they want to increase interest rates in December. It's about the US economy, and then of course linked to what's happening with the US tax breaks. So you have these two different variables. So usually when I look at these variables, I say maybe the truth is somewhere in the middle. So maybe not 127. But somewhere between 127 and 113, maybe that's where the dollar yen should be trading at.
Yeah, I've been looking at dollar yen at the moment. It's been stuck in that range, that kind of 108, 113, 14, and it's been quite a tight range, and it's been looking for breakouts, but there's been quite a bit of resistance above that. I mean, I'd be looking maybe for a bit of a breakout. I think 127 is probably a step too far. But for me personally, I'm looking at this and saying, short the Nikkei and have a bit of dollar yen as a hedge.
Yeah, that could be. Yeah, that's one way of looking at it. But and that's like a mean reverting strategy, and a lot of people do that as well. I haven't actually looked at how that chart looks like, but maybe that could be interesting. Personally, though, what I like to look at it, when I look at it like this, I mean, if there's just a little bit of some sort of catch-up, then eventually the dollar yen would need to take out, 114, 115, which are the highs here from the summer and spring. And if we do take out that level, then I do think we can potentially head up to the highs seen at the beginning of the year.
Fantastic. And moving on, looking at dollar CAD, been quite an exciting one. The CAD, or this currency pair, seems to be moving around quite a bit on macro data coming out from Canada. We had some strong housing starts yesterday. Just talk us through the chart and where potentially this could go from here.
So this is an interesting variable that very few people have access to unless you have a Bloomberg or Reuters platform.
Understood.
So these are the swap rates. You can look at it as the mortgage rates. So the 2-year mortgage rate in Canada and the 2-year mortgage rate in the US. And as you can see, it has a nice tight correlation. And the pink line was moving down lower as the Fed decided that maybe we should the data from the US wasn't that good, so that postponed any rate hike expectations from the market. And at the other hand, Bank of Canada increased interest rates. So we had a nice decline here in the swap yield differential, which explained the move in the dollar CAD perfectly. And now we have a bounce there as the Central Bank of Canada is actually not too eager to increase interest rates. Now, we have a nice correlation here, right? But there's some other things here which are interesting, which is the next slide I want to show you. And here is in yellow is crude oil. And just to make it simple, well, it's supposed to be simple for people to understand, I flipped the currency. So now it's CAD dollar instead of dollar CAD.
Got the reciprocal, yeah.
So the white line is the dollar CAD, but inversed. So when the white line goes up, the Canadian dollar is gaining. Now the idea here is that Canada, which is the big crude oil producer and crude oil energy producer, should benefit from higher crude oil prices. And we know that crude oil prices are at about $57 a barrel now. And we can see that there's a nice little gap here, or difference between what the spot rate is and crude oil prices are. So I'm guessing that eventually, again, we're going to see some sort of convergence here. And will most likely see stronger data out from Canada, and that could potentially cause the Canadian dollar to gain.
Understood. So the trade there potentially is long or short dollar CAD.
Short dollar CAD, yeah.
And we may see an uptick if crude continues to rise. So lots of trade ideas for our viewers.
Definitely. And there's other things as well that I highlighted this week. You have Canadian dollar versus the South African rand as an example, which is the South African rand in general is trading up higher against most currencies. So here you have that edge again, the fact that Canadian dollar has not adjusted to crude oil prices. And if I remember correctly as well, even Canadian dollar versus Turkish lira is trending up higher. So when trading in general, you'll find these ideas. And the idea, of course, is then just to take this idea and pair it against something good. Because as an example, if we know that the Bank of England wants to increase interest rates, and they actually did, might increase interest rates again within the next 12 months. But then in the US, they want to do the same. So trading the pound dollar at this stage is probably not the best thing to do, but maybe buying the pound against the euro, or maybe buying the dollar against the yen could be a better trade.
Fantastic. Lots of great ideas as ever. But in the meantime, Alejandro from Amana Capital, thank you so much for joining us again here on Core Finance.